typical analyst covering 40 companies may know 120 data points on that company. AI tool might know 10,000 data points on that company.
During M&A, people can try and run before they can walk, and they do often end up getting rid of resources
Yes.
that are critical to the business.
Right.
Especially around IT.
In terms of the strategies, we see a lot of investors also not just using AI tools, but investing in AI.
So welcome to Raw AI. I'm Denise Powell, and today I'm joined by Paul Rubens, the CEO and founder of Tamarack Investment Partners. It's a firm that provides strategic advisory services to support emerging investment managers to launch, scale, and succeed at every stage of the growth journey. So in this episode, we're going to be speaking about the quiet shift in business change, what executives actually want. So welcome, Paul. Would you tell us a little bit about yourself and Tamarack Investment Partners?
Sure, it's a pleasure
But especially for the listeners who may not be familiar with emerging manager spaces or the kind of support you provide.
Sure thing. Tamarack Investment Partners connects emerging managers with institutional investors all throughout North America, as well as in the Middle East and Europe. And we're really looking to prepare emerging managers for those institutional investor discussions, whether it starts with their marketing materials or messaging, but more importantly, to actually make those introductions and to help facilitate due diligence that the institutional clients have on these managers. There's always a gap between what institutional investors typically want and what emerging managers have in place at the time. But our job is to help both sides come together and form a strong long-term working relationship. So we provide solution ideas. Just a bit about my background. I grew up here in California, Northern California, went to school locally, but at a relatively young age, at 24, I moved to Hong Kong to help my father's law firm initially expand into Asia. But then I quickly got in the investment management business and ended up spending the next 20 years in 4 different countries: Hong Kong, Taipei, Tokyo, and Singapore. And so a lot of experience in Vietnam as well, which I hope we'll be able to get into a little bit on today's discussion, and also in Korea, where I covered Korea for some larger multinationals from Tokyo. So I've been back in the U.S. for about 15 years, and we started Tamarack 10 years ago, and so it's been a lot of fun so far.
Oh, excellent! Wow, that does sound pretty amazing, actually. I was actually going to ask you a question about how you see the difference in the industry, but I was actually thinking about the countries, especially Vietnam and Korea.
Yeah.
And Taiwan. It's just amazing.
Oh, thank you. Yeah, I mean, it's been fun.
Large multinationals?
Yeah. Yeah, I've
worked with large multinationals and award-winning boutique.
Yeah. That's right. So we've started businesses for large multinationals, like, for example, Bank One Investment Advisors, when Jamie Dimon moved to Bank One from Citigroup. A group of us from Citigroup moved over there, and we were taking their award-winning U.S. fixed income and other short-term fixed income capabilities out to institutional clients in Asia. And it was a great fit because they were looking for manager diversification, and then the clients themselves were delighted to have these institutions as clients, as new clients. And so we started that. That was one new effort. I've been, CEO of a joint venture in Taiwan where, I was employee number 1, representing Alliance Capital of New York in this joint venture, and then hire, in the library of our joint venture partner, and then having to hire, employee number 1, employee number 2, launch products, fit out offices. We've done that for large companies. And then in 2004, I moved over to the alternative side and with two of my oldest friends from the early days, and they had started Black Horse Asset Management in Singapore. So I came on when we were just about 12 million in assets under management, and we built that up to an award-winning manager in Singapore that managed regional portfolios, micro-cap, long-only micro-cap, long-short, and then we had a Vietnam fund as well, where up to 20% of the assets could be in private market investments in that market. So I got operationally involved in some of the private market investments there as well. In addition, since starting Tamarack, part of what we do is we work with startup and emerging managers. It might be somebody that's thinking of launching, or maybe somebody that has launched and is looking to grow, or somebody that was once larger and maybe has stalled out as a firm due to maybe a patch of poor performance, or they've lost their seed investor, or they've lost some of their core investors and they're looking to rebuild. So we see a lot in my space. We see people at different stages of the startup continuum. We went through all those stages at Black Horse. We eventually were managing about 700 million as one of the larger emerging managers in Singapore. There are a lot of decisions to be made along the way for people navigating that growth continuum in terms of what kind of deals you'd be willing to accept at different stages.
Do you see any differences in terms of how people approach growth and scaling in terms of those big multinationals versus the small boutiques?
Sure. I mean, so we've seen examples of both. I've been intimately involved with both. And, when you're a large multinational pursuing a new initiative, like let's say a new office in Asia or entering a new market in Asia, I think you factor in quite a bit of organizational risk, reputational risk of things going wrong. That's the worst scenario. You go ahead and enter a new market and you find out your licensing in that market actually doesn't allow for revenue generating activities. Just give you an example. It might be a representative office that allows you to do some general and informational stuff, but you went a little too far and then you ended up with a regulatory problem.
Yeah.
And that's the worst way for a multinational. There's just a lot of risk mitigation because of the reputational risk of being part of a much larger organization. Like we were at Black Horse, we really only had to worry about the three of us, that worry about what our fellow partners are thinking, as well as our clients, obviously. But in terms of our decisions for the business, the risks that we took in launching new products or in entering new markets, for example, were ones that we could live with and know how other people would react if we did have a wobble or a delay or a hiccup. Being part of a joint venture is also another model that's different, because you have to weigh a board of directors that is made up of all the joint venture partners. Some of them are making financial contributions, some of them are offering facilities or services, but all of them would prefer not losing money. So, reporting into a board like that in the joint venture is a different type of dynamic.
What trends are you seeing now in comparison to like a year ago, especially with all new technology coming out and AI?
That's right. Well, we see AI tools being integrated in the investment research, and certainly in the trading, with algorithmic, trade for executing trades. But it's more, I would say, in the research process, there would be, whereas a typical analyst covering 40 companies may know 120 data points on that company, AI tool might know 10,000 data points on that company. For that analyst not to be using some form of AI tools makes it tougher to compete. You're always looking for that information advantage over the market. What is it that you have that allows you to have an advantage over the market? So I think for a lot of research analysts and investment decision makers, using using those AI tools has become essential. In terms of the strategies, we see a lot of investors also not just using AI tools, but investing in AI. When we talk about Asia, really in Taiwan, you have some of the largest foundries, but you also have quite a large number of the component and subcomponent makers of AI chips. And so there's been ways to play AI from that angle as well, from the investment perspective. And so there's been, I would say, over the past year, we've seen investors put together new strategies that are AI focused. Like, for example, one of the managers we work with has a strong Taiwan presence. And a lot of people like the Taiwan market for within Greater China. So within Greater China, they'd like to be overweight Taiwan, for example. But this manager sees us at, roughly the first inning or maybe top of the second inning with regards to the AI build out. The recent volatility has not impacted their conviction, and they believe that, Taiwan's still at the center of a lot of activity globally, despite the fact that you have a lot of efforts here in the US and in Europe and in other parts of the world to build semiconductor capabilities. Today, Taiwan is really where that capability is. So this manager has decided to launch with partner capital initially, a strategy focused on that AI infrastructure and supply chain. And a lot of that is focused in Taiwan. They're going deeper. It's just an example of one manager who was in the space, and now they're going deeper in the space. Others, we see like multi-managers that are running fund of funds or that are running multi-manager strategies, to not have a good handle on the players in AI is putting you at a tremendous disadvantage. So you have not only benchmark risk, but then all the absolute return potential of what we see as a very seminal point in history with this development of AI.
Speaking about AI and the impact on organizations, especially around transformation, how that actually impacts the organizational structure. Can you talk a little bit about that?
Yeah, I haven't had as much direct experience in digital transformation. We see how successful those companies that are able to provide digital transformation or to introduce AI tools. We see how much in demand those services are. The transformations I've been involved with have been more after an acquisition, like in Vietnam when we took over a vocational college in Vietnam. There was quite a bit of organizational transformation that had to take place as now our Vietnam fund owning that college. And so we had to make a lot of changes, but that was before AI came. And so I wouldn't say that I'm as hands-on in terms of the examples of AI transformation. I've just sort of seen it around me, I would say.
You've built and grown businesses in very different contexts. Are there any consistent blind spots that you see in leadership teams when it comes to executing change?
I think a lot of people come into a situation with very well thought out, well defined in their own mind ideas of what they want to do. Maybe they've been the number 2 or number 3. They've been just on the outside and they've had an idea of what they want to implement once they get in a position. And I think that can be a blind spot, right? Because you don't really know. Every action has a reaction, and we don't know how people would react to certain things. I think a good example is the vocational college that we took over in Vietnam. Our first move was to put in a person who was already with the firm, an American though, so kind of an outsider, but not local Vietnamese, somebody who had been at the manager level. He came in and made some very dramatic changes in terms of letting people go in not a very considerate way, raising voices, implementing change in a more severe way. which is in that culture really not appreciated and not that effective. The reaction to that was a lot of other resignations of important people in the organization. So he may have thought that he was getting more lean, but actually he was destroying capabilities. We had to undo some of that. And I was put in as interim chairman from Singapore, coming in every week just for a couple of days. But I would meet with the leadership team, and it was much more interactive in terms of actually explaining our expectations as the new owner and working with them, providing support, listening to their problems, trying to be a sounding board. This type of leadership style got them very excited, and we started to see more initiative from the local team and using us where they could. We'll bring in the new owners and highlight them in our branding, and we worked with them to ways that we could help. We weren't looking to impose something that was just too heavy-handed, not well-suited to the long-term health of all the relationships and everything that went into building that company over the prior decade. So that was an interesting example.
Yeah, I've definitely noticed that during M&A, people can try and run before they can walk, and they do often end up getting rid of resources
Yes.
critical to the business.
Right.
Especially around IT. And before everything's, the business and the operational side of acquisition happens a lot faster than what the IT side happens. But unfortunately, the IT heads are one of the first to go without full integration. And so you do notice the massive knock-on impact to the organization.
Yeah, that does make sense. I mean, you see that is what I mean. It doesn't make sense. It's never good when we have to let go of people. These days, when people are running so lean, the individuals in the company are highly valued. And I think typically you'd want to put them to work in other areas. We've seen that in large asset managers. We've also seen it in other areas, like with the college, we had to let some people go, but then we were also providing new opportunities to people. So for me, the organizations that I've managed, IT, of course, was critical. We're always hooking into global networks, and we have real time. We need to have the portfolio management systems with a lot of backups and redundancy, and there has to be, a lot of, so IT, it's not, usually it's only a couple of people, one or two, in an organization, but they're critical. So those have been in the small companies that I've worked with.
And in terms of, especially when there's an M&A taking place, and you have new executives that come on board onto the C-suite, and they're obviously reporting to the board, and so it's a new relationship with everything. What would you say to those new executives versus what they say they want versus what they actually need in order to move the business forward?
We've seen a lot of acquisitions, in investment management. Usually it's a capability the larger investment manager would want to bolt on. For example, an Australia equity manager might be added to a team. And they've been running as a boutique for many years and running successfully. They know their market very well. And why would they want to come into a larger organization? Because other investors could allocate to their strategy. The larger global manager could allocate to them. And the larger organization also benefits from the local research that is produced by that Australia team, maybe in the natural resources area or in terms of gauging demand from China. So there's a lot of benefits to that. Now, would those executives, what would they want? Would they rather continue to run their firm exactly as they had, and the new owner is just hands off? Or would they like to have more impact globally? Maybe the person wants to move to New York, or maybe the person wants to move to London and be, move on from being executive in his team to an executive in the larger firm. In our experience, it's been more the former, where they like to have the benefits of the new relationship, but not much change with their team and with the way that they work every day. But we do see others where they get brought in and they've had some success and they are needed in some other part of the organization. And that can be a great opportunity for them. And we've seen how people, could move from being acquired, having their small firm acquired, to being a very senior person in the parent organization. And so that does happen as well. The merger within Citigroup was fascinating. I joined Smith Barney Asset Management in Tokyo 3 months before the Solomon merger, before the Travelers merger. And we became Solomon Smith Barney Asset Management. And then we had the Citibank merger, and we became Citigroup. But before that, we were Solomon Smith Barney Citi Asset Management. Then we had to go through an entire product review of all the strategies across all of the three organizations, working with a consultant, like Rogers Casey or somebody like that, that would help management decide what is your final organization going to look like. And that was fascinating. Mm-hmm. And what we found was that some teams got let go, but others were moved up into a much larger role. And so, each situation I think is different.
Yeah, and that whole target operating model of what the potential of what it could look like and what it should look like. In terms of Tamarack Investment Partners, where do you see yourselves going in the next 6 to 12 months?
So we represent 6 managers right now. It's mostly in the liquid alternatives area, with a focus on Asia. That's where I have a lot of, I know a lot of people from my time there. And then I kind of know something about the markets. So we focused in on representing, managers that we really believe in for the liquid alternatives in Asia. And then we've added some other private markets capability, like we're representing an emerging VC, Carton Capital in the sports and health tech VC space, and they're doing their second fund. There's a limit as to how many managers that we can work with and still be effective with our managers, right? We tend to get spread too thin. But we've added some capabilities. We have an intern based in Paris who helps with our sourcing of LPs around the world and some of the follow-up. And we're training him up. He's just a recent graduate of ESSEC Business School in Paris. And then we have another intern based in Madrid. They were both students of mine at UC Berkeley, where I teach a course a couple of times a year. And she helps with some of the marketing. She helps with some of the producing videos of some of the manager interviews we do, our own Instagram, our own LinkedIn. She's very good with presentations and stuff. And so with those resources, we're just looking to do a better job with the managers that we work with. We're not really looking to add a large number of new managers. One of the developments for us, though, is that we're transitioning to become, so I'm currently registered as a broker-dealer with our private placement broker-dealer in Utah, Yukiko. But then we're going to transition Tamarack Investment Partners to become an exempted investment advisor here in California. So we'll be able to access the high net worth and the mass affluent markets here in California, and then introduce some of the strategies, the managers that we work with. So we're already registered. We're in the final stages of finalizing that and to become an investment advisor. So that's a development that's, when we reached the 10-year mark last year, we told ourselves, and the interns were very helpful in helping me walk through this, that we do need to pursue growth initiatives. And I think this investment advisory one is beneficial to our current managers, and we think reaches a new audience as well. So we're very excited about that.
Where do you think the industry is headed over the next 2 to 3 years? And how are you preparing for their future?
I think from investors' standpoint, it's very difficult to give money to, as it was before. It used to be 2 individuals with a Bloomberg subscription would be enough to get a seed investment or to get a follow-on investment from somebody that really believed in them. Now I think the product launches are much more carefully planned, and you want to make sure you have maybe a little larger team in place and perhaps sufficient backing to be able to give yourself the runway that you need to establish your track record. You also want to get good support from your prime broker in that first year of operation. So I think it's, when you're accepted onto the platform with Goldman or UBS or Deutsche or really anybody, they're going to give you support as an emerging manager in year one. You want to make sure you take full advantage of that, going to the conferences, going to the different events that you're invited to, because in year two and year three, you're not going to have as much support from your prime broker, frankly, because they're supporting new launches. So you have to have already some good legs to your relationships that you've been building up as you move into year two, as you get to year three, and you have a better illustration of your skill through your track record. The investors look for either skill from a track record that you could demonstrate, or sometimes differentiation is enough. But these days, I think they do want to see both. It's well differentiated. You're unique in what you do, but also we can see you're skillful. Either you have a prior track record that you can point to, or a current track record that's already 9 months old, or that's a year and a half old. So we're not taking on operational risk here. So I would say that, so it's a bit become, it's certainly challenging to start, but then there are a lot of professional investors in emerging managers. And if you are a talented person and you have a well-defined investment strategy and you've approached your business in a professional way with high quality third-party service providers, and your team is very tight, it's people's job to find people like you and to invest with you. So I think it's a great industry for people, and we see a lot of innovation. We see a lot of creativity in people getting that information advantage, figuring out what is it that they have that's special, that they do better than others. And so we're excited to be part of that. If we can help a manager get through early growth stage and really help them grow, we can feel good about that.
Oh, that's brilliant. A very exciting market to be in. My last question for you, if you could solve one major challenge today in your organization, what would it be?
One major challenge for me? Well, so for us, when we know 15 people in Montreal, we're interested in meeting 40 people in Montreal. If we know 5 people in St. Louis, we'd like to know 15 people in St. Louis, so to speak. We're always looking to do more. We'd love to have more meaningful dialogues with limited partners, be part of their solution. And so the challenge is growing the business while keeping the quality high as well, not spreading yourself too thin, and finding that sweet spot of we're delivering value on both sides to the managers we represent as well as to the investors, but also not sitting still and being happy with, just the people that we've met. We'd like to further those dialogues, but also meet new people. It's sort of an ever-expanding universe in that sense of people that we'd like to talk to about our strategies.
Brilliant. Well, on that note, if listeners would like to learn more about Tamarack Investment, or connect with yourself, where should they go? Yeah,
I'm on LinkedIn. Also, Tamarack has a LinkedIn. at Tamarack Investment Partners is our Instagram. My email is paul@Tamarack Invest, TAMARACK Invest. And we'd be delighted to hear from people and see where you are.
Fantastic. Thanks. And I'll make sure that those details are put on the podcast as well. But
Great,
Paul,
Denise.
Thanks again. And thank you so much. It's been a real pleasure having you on board. Very insightful. Thank you.
Thank you, Denise.